Welcome back. So where are we then with leases? What we said was if you've got a contract and in that contract you have an asset and that asset you substantially get all the benefits, you direct how, when and what for, and the supplier can't substitute it and make a gain, then basically you've got yourself a lease. Now, what you do on that is you take that asset and you put it to the SFP. And you take that lease liability and you put it to the SFP. And we'll look at that in more detail, how much do you put it for, etc. But that's what you do for all right to use assets and lease liabilities. Now, there are two exemptions where you don't put it to the SFP, you just expense the lease payments to the income statement instead. And you do that if it's a short-term asset, a short-term lease. Okay, so if it's a short-term lease, or if it's a low-value asset that you're talking about. If it's one of those, you can put it to the income statement, the payment for it. Now this one, for each class of asset that has a short-term lease, they all have to have the same treatment. Whereas for the other one, for the low-value assets, you can choose. Do I want to put it to the income statement or do I want to put it to the SFP? You can choose on individual choice, lease by lease, asset by asset basis. Okay, choose on each time you go along. So that's basically it then. So normally with leases, you're going to put a right to use asset on a balance sheet and a lease liability on the balance sheet, but there are exemptions. Short-term lease, you can put it to the income statement, okay, but if you do choose that, every class of asset like that has to go to the income statement. Or if it's a low-value asset, you can put that as well, the cost, to the income statement, and you can do that on a asset by asset basis.